Hey, how's it going, everyone? So today we're going to be taking a look at my M1 Finance investing portfolio. You can see right over here, its current value is $98,000. And as always with these videos, I do like to just show you guys what I'm doing, what I'm invested in, and just kind of giving you a great overview so you can see things happening in real time. Now, with these updates, I just like to show people that the market is so volatile. It goes up and down, especially right now with the market going down pretty consistently over the last year. That, if you are still investing long term, it is going to yield you really good results. For the most part, obviously, you still want to do research and understanding what you're investing in. So you can see right over here, we're going to do a quick update with the performance, and then we're going to talk about some of the stocks in my holdings that are doing well and some that are doing pretty bad. So you can see right over here, just over the last day, we actually lost about almost $700. If we go to the week, we're down about $300. I did slow down a little bit on how much I'm putting in with the market having kind of recovered a little bit, but when I see opportunities, I am still buying. I'm doing about 500 a week, give or take, when possible. You can see over here in the month, we're actually up about almost $450. But the nice thing is, if you look here, we are actually earning about $124 in dividends over the last month. Now, not all of that has hit our account just yet, so keep that in mind because I might end up showing you how much we've earned in dividends so far in the year. So not all the numbers actually match up. But one thing I do want to kind of stress out, even though my portfolio is called Dividend Dennis, and I do love dividends and I care about them, I'm not necessarily interested in them today and how much I'm getting paid out. My goal is to actually focus on the dividends long term. So it's all about building up the dividends and getting companies that are increasing the dividends and are, in a position to be able to consistently pay those dividends over the long term. Now let's go ahead and look at the quarter. So in our quarter, we are actually down about $10,700. But you can see in that time period, we actually put quite a bit of money over that period, and a lot of that was luckily, and it's not really with timing. Obviously, I'm not trying to time the market, but it was during times where the market was fairly low. So for me, I feel like I was able to get a really good value on the money that was going in. Now here on M1 Finance, this is the platform I'm actually using. So if you are interested in checking them out, I will actually put a link for you in the show notes down below. It helps me out, but also gives you a chance to get started with a platform where you can be investing on your own and then have it running in the background, which is something I really recommend for people who maybe want to get into investing, but can't really do it and pay attention to it all day, every day. They actually did end up adding a year-to-date tab right over here. So you can see we're down about $21,300, which is about 24%. But again, with the way the market's been going, this is not too surprising for me. But, it's a little hard to see, a little gut-wrenching to see that amount so high. But long term, we know that we're going to be in a good position. So if we go to last year, we're actually only down $20,900. So a little bit better than our year to date. And then if we go to our all time, this is what's really cool about paying attention to investing for the long term. Now, if you just got started with investing over the last year or even 2 years, it might be even more red than this, but especially if you were probably investing in 2021, it's pretty red at this point. But you can see here in our all time, we're actually only down about $5,400. We've earned about almost $1,500 in dividends as a whole, so that actually helps us out entirely when our calculations for our full return. Now you can see here I've actually in its entirety added over $100,000, so the value is under 100, but that's obviously because the market kept going down when we kept putting money in, and that's okay because we're playing the long game here. We're not trying to get the money out in the next year or two. We're looking about maybe the next 12 to 13, maybe even 14 years to utilize this money. So we kind of want to go based off that and pay attention to those things. So we're only down about 18.5% in total with our investment. So I'm actually really happy about that. I think we are doing better than I would be expecting with how the market has been going on as a whole. But I actually think that the thing that made this not as bad as it is, or not as bad as it could have been, is the fact that we are dollar cost averaging while the market is still down. And I'll show you here real quick if we go into our activities. So you can see here, we're still buying. We're putting in about 500, like I said, a week, sometimes a little bit more. We did 600 there. 900, 1200, and we're buying these companies that we've been investing in, that as we, pay attention to their earning calls and, quarterly results, that these are companies that we still want to be invested in. Some of them are higher risk than others, and then some of them are definitely going to be providing us some great value in the long run. I mentioned we have about 16 holdings right over here. You can see with unrealized gains, we're actually down about 8% in total. Obviously, this doesn't account for anything we sold so far, whether it was for positive or negative, or even the dividend. So just kind of something to keep in mind. But if we go to our unrealized gains, we can see as of right now, Lockheed Martin is definitely taking the cake with its performance. The funny thing is, at one point, this was actually my lowest performing stock. So if somebody's been following along for some time now, you'll actually remember this is one of the stocks I was buying for quite some time because it was just being devastated in comparison, but we still wanted to be invested in the company. Now, we also have Discover here towards the top, Costco, and Apple to round out some of the top companies. We also had Ross right over here, just in the last day or so, actually just pop off and go back into the positive. And I've been buying this company for quite some time when it was going under $100. So I think I brought this up on Seeking Alpha. Let me switch out my screen over here. So you can see right over here, it just popped right off. So it was kind of hovering around the mid 90s for a couple days, and then with the Q3 results, it came in better than expected, and it just really took off. And I believe they also, if I remember correctly, they actually gave a good guidance as well, so that gave people some really good excitement towards that. But the nice thing is, we were buying this entire time that Ross has been down. We were actually even buying over here just a little bit, but not as much. But once it got down here, we were buying pretty heavily into the stock. And this is, again, because this was a company that I was paying attention to. I look at every quarterly result, see what the performance is. So this is called from Joseph Carlson actually has this. He put it together. So you can see right over here the quarterly results. You can see right here for the revenue, we had 4.57 billion. And it actually went into a positive cash flow right over here, which is really nice. Obviously, that's something we want to be doing and building towards, especially when there are a lot of talks of recession and things like that coming around, where companies really need to make sure that they build up their balance sheets right there, so that way they actually have cash on hand. So you can see, obviously, the cash has gone down right over here, but they do have, what is that, 3.9 right there for the billions in cash. So they have very little debt in comparison to a lot of companies, and that's going to help them out as well too. So when the time comes, if the time comes, and they are going to be in a position where they need cash, they have that on hand. The nice thing is they're also even lowering their share count during this time, which is really great because that gives you more value for the shareholder right there. So really excited that Ross took off. I'm probably going to hold off on buying more at this given time, especially because there are other stocks in this portfolio that are now pretty in the red, and let's switch over to that. So we can see here, we've owned Block for quite some time, and we're down about 40% on the stock right over here. So we have an average price of 103, and I believe it's around $60 or so, give or take. We also do have Meta, and this one right here is down about 35%. This we've actually been dollar cost averaging quite a bit, and it's had a really, really rough quarter, and it might still have another quarter or two that will come out that might hurt the stock a little bit more, but I believe long term, this is going to be, in my opinion, a bet that I want to play where I see some really great potential. We could be wrong, obviously, but that's what's so great about having 16 positions in this portfolio, is that we mitigate risk by diversifying our portfolio. But I see a lot of potential, and I think the price point right now, you can see I average about $170. Definitely lowered that because as of this recording, it is pretty low. Let me actually see where that one is for Meta. Meta is about it's cut off a little bit, but $110 on there as well. So if we go back in here, you can see with Airbnb, we're down about 35%, and then with Amazon, we're down about 27%. So I've definitely been buying quite a bit more into Amazon over the last few weeks. You can see here we have about 83 shares. Our cost basis is about 10,600, which one of the things since my last recording, I've actually had multiple companies. You can see here from Microsoft, we have Google, Amazon, Meta, and then very close behind is Home Depot. All of these companies are over well, obviously except for Home Depot, are over $10,000 in what I put into the company, which is honestly pretty amazing to kind of just see that much money being put into these companies. Obviously, I didn't do that all at once. It took time. It took a process. It took investing long term. It took understanding, what these companies were about, if I want to be invested in them long term, and have the ability to keep doing this by being consistent. I think consistency was what really helped out, and so it's really cool to see these companies with that much money in them. Especially with Google and Amazon after their stock splits, even though stock splits don't actually have a huge effect on the actual company values itself. You can see, we have 102 on Google and then 83 on Amazon. Those just look really nice. It's cool to have over 100 shares of Google, and hopefully, one day we're looking at 200-300 shares on the company as well. But putting in 11,000 towards that company, I obviously have a lot of trust towards the company and what they can do, and bring in that revenue and cash flow to be able to feel comfortable constantly investing in them for the long term. So I definitely lowered my average price for Google and Amazon, and even Meta for that matter, during that downturn. Microsoft, I was still investing in them, but their price point didn't change so much so to the point where I think this went down like $4 from the average. And then Ross definitely dropped under $100, which is great for me. And then we had also Home Depot go almost under $300, because I believe at one point we were like at $315 for the average price. So we definitely brought that down. And obviously they pay a great dividend as well too. So I'm excited to be able to start building up a larger dividend from Home Depot, so then we can go ahead and start reinvesting some of that as well. Now, before we continue on, because I do want to show you how much we made in dividends so far for the year, just quickly want to mention that if you are somebody who wants to get some free stocks, Webull right now, if you don't already download them, because everyone has talked about them before, they are giving you 12 free stocks. And here's the cool thing: if you want to sign up, get your free stocks, and then just close your account after you sell them and withdraw your money, you can definitely do that. Or you can try out the app and see if you like it. But get up to those 12 free stocks. You get a few stocks just for opening up the account, and then a few more if you want to go ahead and do your deposits. So that way you can go ahead and keep the stocks there, sell them, whatever you want to do. But that also supports out the channel, so you get more content just like this, where we share and talk about how the portfolio is doing, just being open and honest about hey, these are the decisions that I make when it comes to the companies I have, and I could be making the right decisions or be going in the wrong direction, but we'll only know with time. But being diversified in the portfolio really helps out as well too. So for example, if we're doing this buy right over here, this was on November 21st. You can see here we did some Google, Amazon, Ally, Airbnb, Microsoft, Square, and then, technically Block, and then the Meta platform as well too. So we did quite a few investments into that, and then again we keep doing that week after week. We got some nice dividends from Texas Instrument and Ally, which equaled out to about $67.74, and those you can see just got reinvested into their portfolio. And I sometimes will reinvest into the companies that pay the dividends, but I usually pay those. I take those dividends and I go into the companies that are more, I should say, better opportunities with my money. Because, for example, like when I got this money from Texas Instrument for the 3322, Texas Instrument was not at the time, or as of this recording, was not something I wanted to be investing in comparison to some other companies. So you can see they were trading at 172 and they just had a really nice run up as well too. So to me, I was like, what would be a better use of my money would be in a company that had taken a bigger hit and hasn't recovered as much, which was with Ally and Discover. Those are the two companies that I feel had a lot more run room when it came to going back up and recovering, as well as being able to, like you can see with Ally, has just constantly been going pretty much down for the last several months, not even recovering the same way that a lot of these other companies have over the last couple of weeks, because there's been ups and downs in the market entirely, but Ally definitely seems to be kind of taking a hit, honestly, like week after week, and not seeing a lot of recovery. But if I'm in them for a long time, I see this just, again, as a buying opportunity right over here, as I've just been doing for the last few months, which has put me at, I believe, let me see where I'm at with Ally. So if I go into here, So with Ally, in my all-time, I'm down about almost $700. But I got 122 shares, which is great as they're paying out those dividends. Again, I can take that money and then reinvest into the portfolio. And, obviously seeing the quarterly results, if over time we see the trend going in the right direction, this can definitely start increasing, and we can also get the market value going up on this as well too. So not only are we going to be earning those nice dividends, we have the market gains that will come along with it. Now you can see right over here, this is the dividend income tracker that I have. This just keeps track of how much I've earned in dividends every month. And I divide them also too by quarters as well, just so I can see the growth and the impact that it's having. I'm not fully done with the payouts in November, but because all the companies already passed their ex-dividend date, I know for sure how much I'm going to be getting paid out. So you can see here, I'm actually getting paid out $92.88. Let me zoom in here so we can see a little bit better. So that's $92.88 for the month of November. I do like to compare like last quarter, also last year. But when I do last quarter, I do the same time period as well too. So that would be with August of last quarter. So that was 53.10. Now it's 92.88. A good chunk of that was because we had been investing quite a bit more during those downtimes. And so that gives us more growth with our dividends that we're going to be getting paid out with, which is really nice. Especially when you do those comparisons, that's a really nice growth right there. And then if you look at last year from 2021, that right there is going to be fantastic for us because you can see it was 36.08 last year, and now that 92.88 that we're going to be making. So we are very close, and I wouldn't be surprised if in the first quarter of next year we're going to have 2 months that are going to be over 100 because September was well over 100, and then December, based off of all the numbers, is going to for sure be hitting over 100, even with the companies that have already locked in their dividends, which is really nice. And then if we look at our Q4, so since we've gotten paid out 2 months so far in our Q4, we are sitting at $127.97. Now, if we compare that to the last couple quarters, we still have a ways to go to catch up, but we still have 1 more month left. And then if we compare that to Q4 of 2021, this is what's really cool. So last year in 2021, we made it 153, and this year we're already at 127 without the best month already being accounted for. So we're definitely going to blow out 2021 out of the water for Q4. And then you can see here, we already beat out how much we made in 2021, which is ideal before the end of the last quarter. So let me bring that in. So you can see here, last year we made a total in all of 2021 on M1 Finance, $514. And this year we are already at $779. And again, without December, which is usually the best payout month of the year. We have all the increases that have happened throughout the year coming in, and any companies that sometimes will pay out special dividends. A lot of times they can come out at the end of the year as well too. So that is a really nice increase. And you can see at the bottom, I actually added these little pieces right over here. These percentages are based off of how much of an increase from the year prior. So from 2019 to 2020, it was a 2,059% increase, which obviously because we just got started with this portfolio. And then the following year, we got 180%. And then so far this year, we're at almost 51.6% increase from the year prior, not including the last month, which if we added that in, we're probably looking closer to about like 70-80%, which is more manageable to be able to kind of go that nice increase year after year. My goal, because you can see these numbers are decreasing obviously from 2000 to only 180 down to only 51%. And these numbers are not going to be as big as time goes on because it's going to take a lot more to have these numbers increase. But the nice thing is, if we can get anywhere from about like 15 to 20% increases year over year on how much we're making in dividends, that is huge. That is going to be a really big impact, and you're going to see really, really big changes, in 2024, 2028, and all that, because all the compounding that comes with this, because all the money that we make from these dividends right over here, every single month, we take that money and reinvest it in the portfolio. You saw earlier with Ally Financial and Texas Instrument, we took this money and we just reinvested it automatically back into our portfolio. And I do the same thing with every company that pays out. I take that money, like we had Apple and Costco pay out, and then I put them that one I put into Tesla, but I take that money, and because Tesla doesn't pay dividends, but I take that money and I reinvest it back into the portfolio, which helps us grow and helps us continue to go forward. Now, just in case you haven't been following before, I do know that I have some companies in here that don't pay out dividends. The goal is either by the time I do want to actually utilize these dividends, I will either sell these companies and invest the profits into companies that do pay out dividends, or by that point, maybe these companies will be paying out dividends, such as like Google or Amazon. If that is not the case, again, no big deal for me. I can just sell them. But we had at one point Apple didn't pay dividends and now they do. And if you were somebody who was investing before they were paying out dividends at that price point and then they did, it's a really nice thing to have ownership in these companies even prior to the dividends being paid out. So we'll see that and how it goes long term. Obviously, if you want to follow along, hit that subscribe button. But let me know in the comments down below. How's your portfolio doing so far, especially with the way the market's been going. I do like to hear from other people to see. Are you in the green now? Are you still in the red? Have you been buying the dip? Like, are you somebody like myself who is just seeing all these numbers going up and down and then still feeling comfortable enough to buy the companies that you believe in, that you see the opportunity right now to be buying, because some of these prices are very, very low. Like if we look at Seeking Alpha right now, if I zoom out for a second here. Oh, I got to go to the full screen. So you'll see all the companies. I love this page here on Seeking Alpha because I can see all my companies, and then they have their 52-week range. Now, I use this just as a quick template to kind of keep an eye on certain companies. So if you look at the 52-week, obviously the right number is the 52-week high, and then the left number is their 52-week low. And this little dot right there, that is going to be kind of like that range for where it is. And so what I like to do is with my companies, I come on here and say, okay, which companies that I own already are on the left side of this 52-week range, and which companies are on the right side of this 52-week range. And that gives me some context to say, okay, if it's at its 52-week high, is this something based off of the quarterly results and where the company's headed, that this is still a low price and that it's going to continue to go higher? Which most likely is not the case. Most likely, if it hit its 52-week high, it might be overpriced a little bit, and so I will either hold off on it, rarely ever sell. But then what I'll do is I'll look at the companies that are at their 52-week low or close to their 52-week low, like these ones here and this one over here, and just say, okay, based off of what I believed in the company before, are things changing? Is this an opportunity for me to keep buying? Because I know at one point it can get back to its 52-week high, or is this maybe the time for me to cut my losses and take that money and invest it into something else or the other companies I have? And so that just gives me that quick breakdown, and it really helps out because it keeps me from just saying, okay, well, just because I own, like example, Lockheed Martin, because I own them, I don't want to just be investing in them when they're at their 52-week high, thinking that, okay, this is a little overvalued, the price most likely will come down, so I'll just wait to buy a little bit more, and in the meantime, I'll go ahead and buy into the other companies I believe in, like Meta or, Amazon or even Ally Financial, because those are the opportunities that I have now where their growth will be a little bit better than Lockheed Martin's growth in the next little while, if those quarterly results really indicate that those stocks are either going to be not moving a lot or maybe even coming down, or the price point is where it should be. So in the meantime, before my next video comes out, check out this video right over here if you want to just keep on learning a little bit more when it comes to like dividend investing and things that can really help you out long term when it comes to making sure you have money for yourself in the future.